Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassat. Today is Monday, July 12, 2010. Let's start with the euro-dollar pair, where we saw the euro sliding in overnight trading, extending its losses from Friday's session following hitting a 2-month high around the 1.2720 area. The overnight move in favor of the greenback, maybe traders positioning ahead of the start of the second quarter earnings season, so adding a little bit of risk aversion into the markets. But also in Europe, we're going to have a Greek debt auction, as it's set to sell about 1.25 billion euros of 26-week bills on Tuesday. And as we all know, Greece has been the epicenter of the Eurozone sovereign debt crisis, so investors may be cautious ahead of that debt auction. The focus is also on European bank stress tests results, which are expected to come out on July 23rd, though there may be some early leaks, and if it's negative leaks, then that could pressure the Eurozone. Now, we did see gains in yesterday's session, and we do have support at the 1.2480 area if we come down to that, as well as the 200 period moving average, which we are coming close to, just above 1.25. However, the euro has managed to hold on to its gains following the break above this 1.2470 area, which is now support, which was resistance before, as we had started the month with a very strong gains in the eurozone, as we had some of the sovereign debt fears receding. Also, the euro has been gaining as the shift has moved from Eurozone sovereign debt fears more to the US and its slowing growth. Taking a look at the pound-dollar pair, we had some volatility in today's trading. We started overnight with the pound falling, sliding all the way down to the 1.4950 area after breaking below this support, which we breached in Friday's session, but then extended the gains in today's overnight session. So that was the 1.5085 level. This area here also corresponded to a break of a medium-term upward sloping support trend line connecting our highs from June 12th, 22nd, and July 1st. We can see that this pair had been in a nice uptrend, but then we met some stiff resistance at the 1.5230 area throughout last week's trading. Zooming back into today's trading, we see that the pound did manage to recover most of its overnight losses until it tested this old support level as resistance and then fell downward. The news here was that S&P came out with its assessment of the UK, and it maintained both its AAA rating for the country, but also the negative outlook, as it said that the medium-term economic forecasts are less optimistic than the assumptions underlying the budget, and that the UK government debt burden may approach a level incomparable with the AAA rating. So that put some pressure on the pound, and we could see that it gave up these gains that it had seen throughout the late European session and early New York trading. So technically speaking, this is a bit of a bearish sign, as this support now has held as resistance, and we continued to move below this break of this upward sloping support trend line. Now, we did have some data pressuring the pound in the UK, in the European session, as the current account for the first quarter came in at a deficit of £9.6 billion, which was the widest deficit since the third quarter of 2007, and was about £5 billion higher, a higher gap than what had been forecast. So the market will be concerned if this starts to become a trend, as that pressures the UK fiscal situation, though we have a bunch of important data coming out this week, including consumer inflation data as well as jobless claims, or the monthly jobs report in the UK. We also had the final version of the first quarter GDP that was released, and it matched the second version, which showed a 0.3% growth rate. However, government spending made up a higher part of the rise, with public sector expenditure growing by 1.5% versus the 0.5% reported originally, with private consumption falling 0.1% during the period, despite a 0.4% increase in incomes. So, as the UK's new government pushes ahead with its austerity budget plans, there are signs that the private sector recovery the coalition is banking on to fuel growth could be slow in coming. The recent surveys of consumer confidence have shown already that the government's plans to slash spending and raise taxes is hurting confidence. So those are a couple of things weighing on the pound currently. Getting back to our highlights, now we turn our attention to the dollar-yen pair, and we could see that we rose in favor of the greenback, hitting a high of 89.15, but then the yen managed to pair its earlier losses, or the greenback gave up its gains, and we fell back down. In the New York trading, we're actually probing new lows for the session, hitting 88.38 as of around noon New York time. Now the yen was weaker here as we had Sunday's results for the upper house in elections in the upper house from Japan, and it showed that the Democratic Party of Japan and its coalition partner, the People's New Party, together won only 44 of 121 seats contested, much fewer than the 56 seats the government needed to keep its majority. The loss of the majority means the administration of Prime Minister Naoto Kan will have a tougher time in passing bills to help efforts to improve Japan's fiscal health and can limit how swiftly the government can move to ward off any further slowdown in Japan's recovery. Still, that shouldn't change too much about the dynamics in the currency markets, as the yen remains a safe haven, and moves driven by political changes such as these are usually short-lived, and we see that, in fact, the gain in favor of the greenback were cut rather quickly throughout today's session. We had U.S. stocks turning negative throughout the New York morning session, and so we could see that helped the yen to gain during that New York session, breaking below our short-term moving average in the 1-hour time frame. The current move, therefore, is about a 1/3 retracement of the rally we had seen in this pair after we were at the 87 level in the early part of last week to our high at 89.15. Turning to take a look at a commodity currency pair, the US dollar Canadian dollar, we had seen that the Canadian dollar was much stronger on Friday following a very good employment report that brought back hopes of interest rate increases from the Bank of Canada. However, we did establish some strong support at the 1.03 area. And in today's trading, we rallied from that level, moving in favor of the greenback, as we had a little bit of risk aversion and we had oil prices falling, and as I mentioned, stocks in North America falling as well. So that gave the chance for the greenback to correct some of its losses to the Canadian dollar that we had seen throughout all of last week. Here, similar to the pound dollar, we had established a pretty strong resistance level early last week at around 1.0680, and we broke this upward sloping level of support to the downside. So we'll see how far this correction goes. Currently, from top to bottom, we are around probably the 23.6% area, with 38.2 being the high from Friday. So we'll see if we reach that level, and or to see if this move in terms of risk aversion is a short-lived one or not. There wasn't much in the terms of fundamental news from the US or Canada, so we'll await tomorrow where we get some fundamental data in terms of trade balance. Speaking of tomorrow's fundamental releases, let's take a look at the fundamental docket for tomorrow's trading session. First up tonight at 7 p.m., the UK posts its BRC retail sales monitor, as well as the RICS house price balance. That's followed by Australia's NAB business confidence. In the European session, Japan posts its household confidence, Switzerland releases its producer and import prices data, the UK posts its consumer prices, which is expected to show a decline to 3.1% from 3.4%. That is followed by Germany's ZEW economic sentiment, as well as a measure of leading index for the UK. Tomorrow, as I mentioned, at 8:30, we're going to get trade balance data from both the US and Canada, and that's followed by the IBD TIPP Economic Optimism Index from the US, as well as the 2 p.m. release of the Treasury budget balance. So that will wrap up today's version of the daily video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading this week.